Hey traders, and welcome back to my channel. My name is Emily, and in this video today I'm going to share with you a super simple strategy that you can use specifically for day trading Forex during the New York session. I'm going to show you my entire process, including the news analysis right through to technical analysis to setting a trade, and this can be useful whether you are a complete beginner or a seasoned trader. Before we jump into the main content, I am super excited to share with you a free course that I have just released. It's called Mind Over Markets, and this shares one of the greatest edges that you can bring to the markets, and I'm talking about your mindset. If you struggle with handling your emotions during trading, then this free course is for you. Simply sign up through the link below in the description. Meanwhile, all of the software that I'll be used in this video is linked below. Please remember to like and subscribe to the channel, and let's get straight to it. This strategy is for a simple strategy trading Forex during the New York session. The New York session runs from 8:30 New York time, but for me here in the UK, that is usually 1:30 GMT in the afternoon. My usual process, kind of between 1 and 1:30, will be first of all to check out any upcoming news. And for this, I use forexfactory.com. From here, you can navigate to the calendar at the top, and this will show a calendar of all of the upcoming news. Now, this trade that I am recapping with you, I took in the live markets on Thursday, the 8th of May. And so when I looked at this, there had already been some major news for the pound, but at 1:30, there was some news due out for the US dollar unemployment claims. It's super important to remember to check out any news, especially any that are usually quite high impact, such as NFP or CPI, anything that can affect the market movements. And everybody trades news differently, but for me, I usually wait until the news has been released, and then I look to the technicals once the dust has settled to see if there are any opportunities. Hopping onto the charts here on TradingView, there is one step that I will do before I even consider any kind of technical analysis using price action, and that is to look for a cross over a key daily level. I'm talking about the previous daily high or the previous daily low. Fortunately, there is an indicator that I use that makes this process so much easier. From the indicators tab at the top, you can search for daily high or low. There are quite a few different options here. I already have it on my chart, so I'm going to show that now. And the light blue line shows the previous daily high. The dark blue line shows the previous daily low. My trend continuation strategy and my breakout strategy utilizes these two indicators. And what I'm looking for pre-New York Open at 1:30 is a cross below or above one of these indicators. And I will go through the major currencies looking for this. So first of all, looking at pound dollar, we can see here that during the London session, we got a cross below the daily low, price consolidated, but that major pound news release that was due out at 12 must have been strong for the pound because we got this huge bullish candlestick up. And this made my strategy less than A quality because I couldn't really go short following this trend continuation of the breakout because now we had some momentum and strength coming into the long side. But equally, to look for longs here is against my plan, and I feel it's so important to follow your plan. So I moved on to another currency. My process here is looking for an A quality trade. Australian dollar, US dollar, again, we had a cross below this previous daily low, which meant that my trend continuation strategy would be looking for shorts following this daily intraday trend. So this would certainly be an option, but we're quite extended here. I'd need price to come up really for a pullback before I consider getting short. I may come back to that one. EURUSD, this one looks more interesting. It's very similar to the previous two. We've got a break below this previous daily low, a close below it, but at the moment price is pushing up. Now this is what I'd want to see because I would be looking to go short, but I don't want to sell at the bottom. I want to be selling higher up so that I've got a better entry. So this looks like it could be an option. What's next? Well, next I need to go through my process of technical analysis. And this is important because this is to make sure that it is definitely worth going short on, that I'm looking for the right location to go short. And for this, I will follow a process. So first, let's go to the daily time frame. I've removed my indicator, nice, clean and clear charts to see what is going on. And overall, we can see that EURUSD has been coming up in an uptrend, making higher highs and higher lows, higher highs and higher lows. and a new high here. But recently, looking at the most recent price action, price has been kind of coming down, making lower lows, lower highs, a new low here. And on the Wednesday, the previous day, we had this engulfing bearish candlestick. Well, as this all looks very positive to look for shorts, because ultimately the trend is up, I wouldn't be looking to hold on to my position too long. Dropping to the 4-hourly time frame, and I'm just going to make those vertical session break lines just a little bit less obvious. The 4-hourly just gives us more information than the daily, but it's the same kind of gist of price coming up and consolidating here. In fact, I could even add this line here representing this little support level, that if price broke and closed below this, there's a high chance that it will come down to retest this consolidation level here. These are all important levels to consider, more so for when you're thinking about stops and targets as well as entries. The other thing I like to look at on the 4-hourly time frame is the recent closing candlestick. So if we look at intraday for the 4-hourly, price opens on the Thursday at this candlestick here. It pushed up, then we got a strong close down during London, and then the 2 o'clock candlestick close. We did get a green, but it had this large upper wick. Now this is really good to see because this is weakness, so it's rejecting the highs here. Looking at this, I would say that that's confirmation that we're still bearish during the day. I've been trading with the prop firm, the 5%ers, for some time now. As a prop firm, they are a great option if you want to trade a larger capital, where you can trade one of their account sizes and you both take a share of any profits that are made. But they don't stop there. As well as offering account sizes for trading, they also offer these extra features, including live trading room, free webinars and workshops, and one-on-one performance coaching. They have 3 different programs that they offer to traders: the hypergrowth, high stakes, and bootcamp program. I'm currently funded with the hypergrowth program, so I am trading that live account with the 5%ers and taking a split of profits that are made. And I'm currently enrolled in the high stakes program challenge as well. And my favorite feature of the programs that the 5%ers offer that differ from any other prop firm out there is the fact that they have removed the time limit, which means that you have an unlimited amount of time to pass the program. This is a massive game changer, and it can really help you to avoid falling into a stressful situation when you're trading. Let's face it, trading can be stressful enough. If you want some more information, or if you're ready to have a go for yourself, do check out the link below in the description. Once I've completed my top-down analysis, the daily and the 4-hourly, I will end up on the 15-minute, which is the time frame I like to use for trade execution. I can carry on looking at price action, but I can also add some extra drawing tools such as the Fibonacci retracement to help me find an entry for the short. So let's add back on the daily high and low indicator, and let's have a look at intraday price action. And all I'm doing here is reading the candlesticks. It's super simple. And with practice and time and experience, you can get more accurate at it. I found that the Candlestick Trading Bible really helped me when it came to learning how to read candlesticks. And it's only about $5 off Amazon. It's certainly worth reading if you've not read it before. So from the 10 o'clock open, we had a push up, pull back, and I'm going to simply follow this little structure of candlesticks to just see clearly where price is. So during the Asian session, we had this little uptrend forming. Then we kind of grinded here. We got some momentum coming in from the bears, and they took out all of these structural levels. So this is the CIB, the change in behavior that we witness from this intraday uptrend to the intraday downtrend. Now we got a pullback here, building support before I drop. But the important thing I notice is that the body here doesn't close below the open body here. I see what I mean? In the grand scheme of structure, this would be the high I would consider using, which means that if I'm going to use a Fibonacci retracement tool, which is what I like to use to find an entry level, I'm going to go from the high of the day using the bodies only. And I'm going to drop it at the low of the day, using the bodies only. If this level had closed below this one here, then I probably would have used the Fibonacci tool a bit lower down, but it needs to go from here. If in doubt, you can always switch to a line chart. It can sometimes just help you to find those peaks a little bit more clearly, but personally, I prefer to use Japanese candlesticks. So once I've got my fib level placed here, I've definitely got a cross below the previous daily low. I'm definitely looking for shorts. The previous daily candlestick was bearish. So this is looking A quality at the moment. I would simply place my entry level in this optimum trade entry level. This is these 3 lines here. And they are if I stretch them out, you may be able to see, the 62%, 70% and 79% level. People use Fibonacci retracement very differently. I have found these to be a very accurate level to place an order at. It gives enough room for a price to retrace, to have a better entry so that the stop loss doesn't have to be so big. But in the case of this trade, my stop loss did end up being quite big because it had to be enough to reach the high up here of the pullback to account for any market movement. So I set my order for a sell at 16 pips. But I mentioned before stop loss, where's the best place to set a stop? I usually like to use between a 10 and a 20 pip stop, ideally 15. The shorter the stop usually means that you will reach your target a bit quicker if the market is moving. If you have a larger stop, sometimes it can take longer. So I don't usually like to use a 20 pip stop, but in this case, it had to be 20 pips because if price was going to continue coming up, I had to give it enough room to reach this, to retest this level here, because this was the high. This was the structural high from price action. Using a 20 pip stop, I could have aimed for a target breaking the low, a nice 2R target. That would have been perfectly reasonable. I could have even considered this horizontal line we drew on the charts from the 4-hourly time frame. I could have even considered a break of that. As per my plan, I kept this at a neat and tidy 1.5R profit target. So that is a positive profit loss ratio. I'm aiming to make more profit than what I'm risking on the trade. That means if I take a win and a loser, I'd still be up overall. Now I actually set this up at 1:30 once we had the US dollar news release. Because once that news release has happened, any kind of huge moves that we would see would have already happened. They would have already taken place. So I know it's safe to then place my order. So at this point, I think I was already short. If I drop to the 5-minute, you can see here that 1:30, when the news was released, we just got this initial drop down and then we got a strong push up. That was when I got short. But there would have been another opportunity to get short. If I just play this through, price pushes up and you get a little retest here of the entry. So you could have had that as an opportunity to get short again, which would have been at 3 o'clock. Or to obviously add to your position. And personally, I find trading the New York session from 1:30 until 2 is when you get a news release and then you get your 4-hourly candle close. So it can sometimes be a little bit more choppy. But usually I find that 3 o'clock onwards, and this doesn't happen all the time, but from my perspective, in my opinion, my experience, I find that from 3 o'clock onwards, you tend to see the direction forming. So when 3 o'clock came and we got this huge bearish candlestick down, I felt much more relaxed about the trade because I felt like that confirmed it was going to trend lower. And indeed it did. It came down at just before 4 o'clock and hit my target. So I made my win. But if I just play this through out of curiosity, you can see that price did in fact come down lower. It broke that horizontal level from the 4-hourly time frame. And it came down to retest the whole dollar amount, 1.12. So if I had doubled up my position, there would have definitely been room there for a trade runner. And that's why it can be helpful to drop to a larger time frame, especially when it comes to targets, because it can help you to gauge where price may move to. If I zoom out here, just instead of using a different time frame, I know that the candlesticks are really small, but you can see where they cluster. That's where you get a lot of consolidation. And prices drop down to this level, which is a previous cluster. It's a previous range. There'll be a lot of orders sitting there, so price will be drawn there to release those orders. These are the trades that I like to take. They are clean, they are clear, they are A quality, they match my plan. They're much easier to ride the emotions with. And if they lose, you know that you did all of your steps correctly. Once again, if you haven't signed up to my free email course, Mind Over Markets, do check it out. It's a brilliant resource to help you to learn more about the effects of trading psychology and how to handle those pesky emotions when they come in to interfere with your trading. Meanwhile, if you've enjoyed this video, please smash the like button. Don't forget to subscribe to the channel, and I'll catch you in my next video. Thanks for watching. Bye.